All right, so let's dive right into this pile of ASX articles
Oh, wow.
you sent my way. Clearly, you've got your finger on the pulse of the Australian markets, right?
Always.
So we're going to unpack all of today's action and take a look at, what's coming up in the year ahead. We've got some pieces here from the Motley Fool Australia, ABC News, even a little peek into some insider info with Street Talk.
Oh, nice.
So buckle up because it looks like this week was a bit of a roller coaster,
Yeah.
ending on Friday the 13th, no less.
Oh, spooky, huh? It certainly was a ride. And it's just fascinating how those global trends and then the sector-specific stuff and even like the political whispers all kind of converged
Right.
to create this dynamic market we see on the ASX.
So tell me, is Friday the 13th like a real thing? Did it actually, play some kind of role,
Yeah.
or is it just a spooky coincidence?
Well, some people might joke about the whole market superstition thing, but the ASX 200 closing down 0.4% on Friday, hitting its lowest point in 4 weeks. It has a lot more concrete explanations. This actually wraps up a pretty rough week for the index, down 1.5% overall, and that's actually the biggest drop since early August.
Wow.
So yeah, it's a mix of things, really. You got those global trends, particularly those losses on Wall Street. They kind of have a ripple effect. And then some sector-specific events that really pulled the ASX 200 down.
It's interesting because Monday was the only day with any gains
Right.
this week. And even then, it was just like a measly 2 points,
Yeah.
Makes you wonder if those gains were ever really going to stick.
I know, right? It just goes to show you how sensitive the market is, right,
Mhm.
to global stuff and then investor confidence.
Totally.
Yeah, one day of little gains can just get wiped out by, bigger trends.
Yeah, absolutely. Let's talk about some of those sectors then.
Okay.
And the events that made up this week's performance. It looks like the materials sector, specifically the miners, they really kind of dragged the market down.
For sure.
What was going on there?
Well, iron ore futures took a tumble, down 2.4% to below US $104 in Singapore.
Oh.
And this really had a huge impact on the materials sector. We saw that reflected in some of the major players, like BHP Group, down 1.5%, Rio Tinto down 2.8%.
Yeah.
But then you had Fortescue, and they really felt the heat.
Yeah.
They dropped a pretty significant 3.7%.
That's a big dripe. Was it more than just the iron ore price, though?
Yeah, so on top of the iron ore woes, they also got hit with some governance concerns.
Oh, interesting.
Yeah, it seems like investors are a little uneasy about a perceived lack of transparency, in some areas of the company.
Mhm.
And these kinds of issues, they can erode confidence so quickly,
Oh, for sure.
even when their core business looks strong.
Yeah.
It just reminds us, that investors are really scrutinizing the way companies operate these days,
Right.
not just the bottom line.
That's a good point. Yeah, transparency and good governance are like crucial in today's market. But let's shift gears for a sec to a brighter spot, shall we? It seems like tech was kind of a surprising, beacon of positivity in all of this doom and gloom. Why is that?
Yeah, it's true. Even in a down market, you can have those sectors and those specific companies that kind of go against the grain.
Mm-hmm.
And Ayers, the software provider, they saw this crazy jump, 8.2% this week. This all happened after they reaffirmed their earnings guidance for the year,
Mm-hmm.
which basically reassured investors like, hey, we're on track, we're going to hit those targets. And, they didn't stop there.
So there's more to the IR story.
Oh, yeah. They're doing something pretty exciting, especially for their investors. They're bringing back dividends.
Wow.
And this move, it signals confidence in their future performance. It's a great incentive for investors, and it's definitely a savvy way to grab attention
Right.
and maybe even attract some new investors, especially when the market's a little crazy.
Yeah, that's how you make a statement. It seems like attracting investors was on the mind of a few companies this week, especially in the financial sector. Insignia Financial made a splash, right?
Oh, for sure. They saw a 6.2% jump after getting this super lucrative takeover offer from Bain Capital, $4 per share.
Wow.
Yeah, sent their stock price soaring, like 3-year high. That's a big win for Insignia Financial shareholders.
That's quite the premium. Makes you wonder about Bain Capital's play here, right? Do they see something in Insignia that maybe everyone else is missing?
Right.
And what does this potential acquisition say about the financial sector as a whole?
Well, that's the million-dollar question, isn't it? It definitely raises the possibility that other companies in the sector could be ripe for similar takeovers.
Yeah.
And this could cause a domino effect. Investors are going to start speculating, like, who's next?
A chain reaction of takeovers, that would definitely shake things up. Speaking of sectors that are, maybe on the move, the energy sector seemed comparatively stable this week.
Yeah.
Although there were some interesting undercurrents there, especially around uranium stocks.
Right. You've got those upcoming U.S. elections, and then the global supply chain issues, particularly coming out of Niger. All of that's adding this extra layer of, well, complexity.
Right.
And it seems like uranium stocks are definitely reacting to these developments. Investors are weighing the impact, what will that U.S. election outcome actually mean for energy policy? And then there are the concerns about disruptions to the uranium supply chain.
Sounds like the energy sector is in a bit of a holding pattern for now.
Yeah.
A lot of uncertainty hanging in the air.
For sure.
But before we dive deeper into these larger market trends,
Okay.
let's zoom in on a few specific companies
Okay.
that caught our eye this week. First up, Qantas. Seems like they're facing some turbulence.
Yeah, indeed. Qantas shares dipped 1.2% today, and that's all because of the strike action by hundreds of their engineers who are, looking for better pay.
Oh, that timing couldn't be worse for Qantas.
I know, right?
Holidays are right around the corner.
Exactly.
Could this thing escalate and, really mess with everyone's travel plans?
It's definitely a possibility. Right now, airports are saying business as usual,
Okay.
but, with the holiday rush coming, who knows?
Yeah.
This is definitely something to watch closely, because if that strike action drags on, it could seriously disrupt travel.
Absolutely.
And really hurt Qantas's bottom line, especially during peak travel season.
Yeah, no kidding. Okay, let's move on to Metcash. Their performance this week seems to be tied to the whole world of dividends.
Yeah, you're right. Metcash went ex-dividend today, meaning that anyone who buys shares now won't get that upcoming dividend payout.
Right.
And this often causes a little dip in the stock price because some investors sell off to chase other opportunities.
Yeah.
Plus, they also just recently cut their interim dividend to 8.5 cents per share, payable January 29th.
I bet that made some investors nervous.
Understandably so. This dividend cut probably reflects Metcash's updated financial outlook, and it could signal some broader economic pressures that are hitting the retail sector.
Yeah.
Investors are always super sensitive to dividend changes, especially reductions,
Right.
because it can feel like a lack of confidence in future earnings.
Yeah, for sure. Makes you wonder if this is a sign of what's to come for other companies in retail. But let's end on a high note, yeah. Boss Energy, a company that's not offering any dividends right now,
Okay.
but some analysts are really singing their praises.
Yeah, now this one's really interesting for those bargain hunters out there. Bell Potter analysts, they've given Boss Energy a buy rating,
No.
and they've set this, pretty ambitious price target of $4.70.
That's like a potential upside of 87%.
Yeah.
What's got Bell Potter so excited about Boss Energy? What's the magic formula there?
They think Boss Energy is seriously undervalued, especially compared to its North American peers,
Oh, yeah.
especially with all the projected growth in the uranium market.
Yeah.
They're really interested in Boss Energy's Honeymoon project in South Australia. They see that as a big driver for future growth.
It sounds like Bell Potter's spotted a hidden gem in Boss Energy that maybe, more risk-tolerant investors might want to look into.
Sure.
It seems like they're pretty bullish on a few companies for 2025. Who else is on their radar?
Well, they've also highlighted Brickworks and Polynovo as potential winners for the coming year.
Okay, let's start with Brickworks. What's the logic behind their optimism?
Bell Potter's banking on those interest rate cuts in 2025,
Right.
which they believe will be huge for Brickworks. They're predicting this could mean double-digit growth for the company, mainly driven by that increased demand in the building and construction sector.
So lower interest rates mean it's cheaper for people to borrow,
Yeah.
leading to more construction, which means more demand for Brickworks products. It's kind of a chain reaction. But is everyone as optimistic as Bell Potter?
Well, not necessarily. Bell Potter's bullish, sure, but some other analysts are a bit more cautious about how much of an impact those interest rate cuts will actually have.
Yeah.
Some are arguing that Brickworks' growth potential could be held back by those, ongoing supply chain issues
Right.
and rising input costs. Those things could eat into their profits even if demand goes up.
Huh.
It's a good reminder that even the most, optimistic predictions, you've got to take them with a grain of salt.
Yeah. A little healthy skepticism never hurt anyone in the world of investing. Now, what about Polynovo?
Good.
Completely different sector, right?
Mhm.
And also one of Bell Potter's favorites.
Yeah, Polynovo's in the world of medical technology.
Yeah.
And they're actually projected to have a really strong year, financially speaking. Bell Potter's forecasting revenue growth of over 30%.
Wow.
And they're anticipating the company will finally hit profitability. That's a huge milestone for any company, especially one in such a dynamic and, competitive sector like med tech.
Achieving profitability, that's a
Right.
turning point for any company. What's driving this growth for Polynovo? Are they launching like groundbreaking new products, expanding into new markets?
Actually, they're seeing strong demand for their existing products, particularly in the burn care and hernia treatment markets. They've also been really strategic. They've been expanding their sales force and their distribution networks,
Mm-hmm.
which is helping them reach a much wider customer base.
Mm-hmm.
It's a great example of a company that's executing its growth strategy really well.
Sounds like they're firing on all cylinders. Now, Bell Potter is bullish on uranium, but UBS seems a little more cautious about the sector, even though they're also predicting some momentum for uranium prices. What are their concerns?
Well, UBS brings up some valid points about the potential risks, what's lurking beneath the surface. They're highlighting how unpredictable the U.S. election outcome is and those ongoing supply chain concerns, especially the ones stemming from Niger, and then that unresolved U.S.-Russia enriched uranium trade spat. These are all major geopolitical factors that could have big consequences for the uranium market. It just shows that even when you have positive market predictions, you still need that healthy dose of caution.
It's like walking through a minefield, right?
Yeah.
You might see a clear path, but who knows what's hiding underneath? But before we wrap up this first part of our ASX deep dive,
Okay.
there are a couple of intriguing nuggets from the article
Oh, intriguing.
that I just wanted to get your take on.
All right, I'm intrigued. What caught your eye?
Well, firstly, the Australian Energy Council's warning about the coalition's nuclear plan and how it could impact the country's energy transition. What are your thoughts on that?
Well, it's a bold statement,
And
and it throws a whole new level of uncertainty into the energy landscape. Their worry is that this coalition plan could backfire.
Right.
It could mess with investment decisions
Yeah.
and really hurt the country's ability to hit those emissions goals.
Mm-hmm.
It raises some big questions
Uh-huh.
about the long-term viability of different energy paths
Absolutely.
and how this whole policy shift will impact renewable energy.
It's complicated with
Yeah.
far-reaching implications. Definitely something we'll explore further in this deep dive. Now, last but not least, a fascinating, though slightly depressing, fact about Australia's wool production. It's headed for a pretty significant decline.
I know, it's wild, right?
Yeah.
It really shows you how global market forces and even internal competition can hit entire industries. Wool production in Australia is expected to hit its lowest point in over a century, mainly because of those poor wool prices and the fact that other agricultural sectors are just more profitable.
It's a tough reality
I
for
know.
those in the wool industry. What do you think the future holds for a sector that was once so thriving?
It's hard to say for sure, but one thing's clear. They need to adapt to survive. Some producers are getting creative,
Yeah.
trying to add value to their wool, like developing new blends or finding those niche markets. Others are just diversifying, moving away from wool altogether.
Mm-hmm.
It's tough out there. Only time will tell how the industry will evolve.
That's a great point. Adaptability and innovation are key in any industry,
Absolutely.
especially those facing, some headwinds. Well, this brings us to the end of part one
Right.
of our ASX deep dive. We've covered a ton, from market trends to company performances, even got a glimpse into the future of some key sectors.
Yeah, it's been a whirlwind.
It has.
Stay tuned for part 2, where we'll go even deeper into these trends and see what it all means for investors like you. We're going to break down those expert predictions, analyze the potential risks and opportunities, and talk about some strategies for navigating this market in the year ahead.
A lot to look forward to.
Oh, yeah. So it's been a real mixed bag this week, hasn't it?
It has.
Winners and losers all over the ASX.
Yeah.
It really makes you think, what does all this actually mean for investors
Right.
who are trying to make sense of this crazy market?
Yeah, this week definitely threw us a few curveballs, but I think the takeaway here is, stay informed.
For sure.
Right. We've seen how what happens globally, on Wall Street, can directly impact the ASX.
Absolutely.
Yeah.
It's a constant reminder that, it's a global market out there. Everything's interconnected.
Yeah.
And it's not just about tracking those big trends either, right?
Yeah.
It's also about understanding what's going on in specific sectors, the events that shape them. Think about the Qantas strike, the Insignia financial takeover, or all that stuff happening in the uranium market.
Sure.
It's like this giant puzzle where every piece matters.
It makes investing feel like a constant balancing act, You're trying to keep up with the big picture
Right.
while also zooming in on all the little details
Oh, right.
of companies and sectors. How do investors make sense of it all?
That's where critical thinking comes in.
Okay.
You've got to connect the dots, assess the risks, and make sure your investment decisions are actually lining up with your goals.
Right.
Like take Bell Potter's take on Brickworks, for example. They're super bullish, right?
Mm-hmm.
And that's all tied to their prediction about interest rate cuts in 2025.
So their optimism is based on the idea that lower interest rates are going to stimulate the construction sector.
Exactly.
Which then leads to higher demand for Brickworks products.
Yep.
Seems logical enough, but is it a guarantee?
Well, that's the big question, isn't it? Lower rates can definitely encourage borrowing and investment,
Sure.
but there are always other factors to consider.
Right.
What if the price of building materials keeps going up?
Mm-hmm.
That could totally offset the benefits of those lower rates. Or what if consumer confidence stays low? People might be hesitant to invest in new construction projects, no matter how low the rates are.
That's a good point.
So yeah, even with something that seems as straightforward as interest rate cuts,
Yeah.
there's a whole lot of complexity beneath the surface.
It highlights the fact that you can't just blindly follow predictions, right?
Mm.
You need to understand what's driving them,
Exactly.
what might support or contradict them.
It's all about understanding the bigger picture.
And this brings us to another important point, right? Diversification.
Oh, absolutely. That's key, especially in a market like this.
By spreading your investments across different sectors, different asset classes, you can potentially lessen the impact of those unexpected events
Right.
and build a more resilient portfolio. It's like a safety net
Safety net, exactly.
for your investments.
You got it.
Diversification, always a good idea. Now let's shift gears to a company that seems to be, defying the odds in all this uncertainty.
Right.
Polanovo. Their projected growth and the anticipated profitability, it's impressive.
It is. They're a great example of a company that's not just surviving, but thriving.
Yeah.
Even when the market's throwing punches, their secret.
Yeah. What is it?
Well, they've got a few things going for them. First, they're operating in a niche market with high demand for their products.
Right.
And they're innovative, always coming up with new stuff. Plus, they've been really smart about expanding their reach into new markets. It's a recipe for success, really.
It shows that you don't have to just react to market trends.
Right.
You can actively shape your own future through
Yeah.
innovation and a clear vision.
They're not just riding the wave, they're making their own wave.
I like that.
Yeah.
Now, while we're talking about navigating a tricky landscape,
Okay.
let's go back to that intriguing nugget about the coalition's nuclear plan,
Oh, yeah?
the Australian Energy Council's warning about its potential impact on the energy transition. It's a big deal, right?
It is. It makes you wonder about the ripple effects of such a major policy change.
Could it slow down investments in renewables, delay Australia's progress towards its emissions goals? Lots of unknowns.
It's a very controversial topic
Yeah.
with strong opinions on both sides.
Yeah.
Some people see nuclear energy as the answer,
Right.
a way to meet those growing energy demands while also cutting down on emissions.
Mm.
But then others are worried about safety, waste disposal, and the potential for costs to just spiral out of control.
It's complex.
Oh, it is.
And it shows that investors need to be aware of more than just market trends and company performance.
Right.
They also need to understand the political and regulatory landscape that can shape entire industries.
Absolutely. It's all connected. Those political decisions can have a huge impact on energy policy, which then affects investment flows and how companies in the energy sector perform. Staying informed about all of that is crucial for making smart decisions.
So it's about understanding the big picture and the small details,
Right.
global trends, and what's happening in specific sectors. And speaking of sectors, we can't forget about that stat about declining wool production in Australia. It shows that even industries that seem really well established can face serious challenges.
Yeah, it's a classic case of those global market forces and internal competition disrupting an industry. With wool, it's those falling prices and the fact that other agricultural activities are just more profitable right now.
Yeah.
That's led to this shift in production.
It makes you think about the long-term viability of certain industries, and how important diversification is,
Oh, for sure.
even within a specific sector. Putting all your eggs in one basket, even if it's been a reliable basket in the past,
Right.
can be a risky move.
Exactly. Spread that risk. Diversification helps to balance things out and potentially even boosts your returns.
Right.
You're exposed to a wider range of opportunities that way.
Yeah.
Like they say, don't put all your eggs in one basket.
So we've talked about market trends, company performance, expert predictions. But let's bring it back to the listener for a second.
Yep.
What can you actually do with all this information? What should you be focusing on as we head into the new year?
That's the million-dollar question, right?
Yeah.
Knowing something is only useful if you actually use it. So first things first, take a look at your current investment portfolio.
Okay.
Do your investments match your risk tolerance
Hmm.
and your long-term goals? Are you diversified enough across different sectors and asset classes?
These are like the fundamental questions that every investor should be asking themselves
Oh, for
on
sure.
a regular basis.
Absolutely. And if you're feeling lost or unsure,
Yeah.
don't be afraid to ask for help. Talking to a financial advisor who gets your situation can be a game changer.
It's like having an expert guide in this oftentimes confusing world of investing.
Exactly. And there's no shame in getting some advice. Even seasoned investors can benefit from an outside perspective.
Absolutely. It's all about continuous learning, right?
Mhm.
Adapting to this always changing market.
It never stops.
It doesn't. The more you know, the better equipped you are to make those good decisions.
You got it.
So we've given you a lot to think about today, but before we wrap up this deep dive,
Okay.
I want to leave you with one final thought.
Ooh, a final thought. I like it.
Something we haven't explicitly discussed, but has been kind of woven throughout our conversation today.
Okay, I'm intrigued. It's a powerful idea, right?
Yeah.
Aligning your money with your values and actually making a difference in the world while, still reaching your financial goals. It's like a whole new way of thinking about investing, not just profits, but impact.
Yeah, it's a shift we're seeing more and more of globally. Investors, especially younger generations, they're really starting to think about where their money's going and what it's doing.
Totally. They're not just looking at the numbers anymore, are they?
Nope, they're digging deeper. Checking out those environmental practices, the social impact, how committed a company is to good governance.
It's not just a trend, though. This is about smart investing. Companies with strong ESG practices, they're usually better at managing risks, adapting to all those new regulations.
Think about climate change, right, and how it's affecting so many industries.
Yeah,
And companies that are already addressing their environmental impact, they're going to be more resilient in the long run.
for sure. And it's not just about avoiding risks either. It's about jumping on new opportunities. This whole transition to a more sustainable economy, it's creating a ton of innovation and growth
Yeah.
in areas like renewable energy, clean tech, sustainable agriculture. Investors who are paying attention to these trends, they're going to benefit big time.
It's like, being ahead of the curve instead of getting swept away by it.
Exactly.
And we can't forget about the social impact side of things either. Supporting those companies that prioritize fair labor, practices, diversity, community engagement. Those things have a ripple effect, right? They help create a more just and equitable society.
Absolutely. Those are the values that matter to a lot of investors. They want to put their money where their mouth is.
We saw it this week with Fortescue, right? Those governance concerns really impacted their performance. And the Australian Energy Council's warning about the coalition's nuclear plan, that brings up a lot of questions about long-term sustainability in the energy sector.
It's all connected, isn't it?
It is.
What we choose to invest in, it influences how companies behave, what governments do, the direction our society takes.
It's powerful.
It is.
It makes you think about the legacy we're leaving behind as investors, right? Are we investing in a future that we actually believe in? A future that's both prosperous and sustainable?
Big questions, but important ones. And the good news is there are more and more resources out there to help people align their investments with their values.
Yeah, there are a bunch of different approaches to ethical investing. You've got impact investing, where the main goal is positive social or environmental change alongside financial returns. And then there are sustainable funds that screen companies based on their ESG performance.
And you don't have to sacrifice returns to invest ethically. A lot of research actually shows that companies with strong ESG practices, they often do better than their peers in the long run.
So it's about doing good and doing well.
Exactly.
A win-win for everyone.
It is.
So as we wrap up this ASX deep dive,
Okay.
I encourage you to look into ethical investing in Australia. There's tons of information online through financial institutions, even dedicated ESG research firms.
Resulter.
Explore the different options, figure out which issues resonate with you the most, and see how you might incorporate ethical considerations into your own investment strategy. It's a really interesting time to be an investor. You have the chance to grow your wealth and contribute to a better world at the same time.
It's a powerful combination.
We've covered a lot today, from market trends and company performance to the bigger picture of what our investments actually do.
A true deep dive.
And remember, this is just the start, right? A deep dive always leads to more exploration. Keep learning, stay curious, and most importantly, invest wisely.
And invest with purpose.
That's it for this episode of The Deep Dive. We'll see you next time.